Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 futures charts on this very first trading session of a new trading week. Now this week is going to be a very important week for this market rally that we've seen over the past couple of months here for the broad US indices, and this is because we have so much economic data that we are set to receive as of tomorrow onwards. I actually shared this with my Signal team. If I just quickly show you, this is the table going into this week. Now tomorrow we get the CPI inflation report. On Wednesday we get the PPI, and then of course on Wednesday we also get the Fed interest rate decision, along with Jerome Powell's press conference, where there's an opportunity for him to either come across more hawkish or dovish. In my opinion, I think there's more of a risk of him coming across more dovish than hawkish because of some of the data that we've seen as of recent with inflation coming down. But of course, going into the meeting, of course, looking at the data that we're expected to see tomorrow, we're going to get some very key inflation data. So hopefully that inflation data can continue to trend downwards going into the meeting. And then I think that the risk is definitely towards the upside for the US markets going into that FOMC meeting. Then of course on Thursday we have retail sales, which is going to give us an idea of how strong the consumer is. We also hear earnings reports from stocks like Costco on Wednesday evening. Of course, that will give us a very good inkling as to how strong the US consumer is. And then, of course, on Thursday, we also have initial jobless claims. And then on Friday, just to see it all off, we have the global services PMI. So lots of economic data this week, team, and it's really going to be the last hurdle of 2023 for us to overcome before we could potentially see a Santa Claus rally into year end. Now, one thing that I am slightly concerned about here in the S&P 500 is that the RSI has now gone above 70. We currently have an RSI at 70.96, but what's positive is that we've broken above those August swing highs, and you could potentially argue that we're trying to break out here. I think that one other barrier we need to overcome are the highs that we formed back in March 2022. We're not quite over those highs yet, but if we saw a break above 4,650, that would be very, very positive. And I think what I really want to see is this close above these recent peaks, and that to me would say that we really have broken out here. And I think that going into year end, we could potentially go and target 4,800, despite the RSI telling us that we are overbought. Because as you can see in recent trading sessions, it's not abnormal for us to go up towards, let's say, towards 80 here for the RSI for the S&P 500. Moving over to Nasdaq100, very similar to the S&P 500. However, we are not yet considered overbought in the RSI with an RSI reading of 66. But I actually quite like this chart. I think this setup is very attractive here. It looks to me that we've been forming like this bullish flag pattern. We've broken out now, and I think a close around these current price levels is very, very bullish for the Nasdaq 100 going into year end. And I think that we could potentially go and target the previous all-time high, which sits around 16,700. So I definitely would be a buy on any weakness if some of the data did disappoint. And then of course we have the DowJones30. The Dow has had a very high rating of overboughtness as of recent. We currently have the RSI trading all the way up at 77. So I don't think that there's much further this market can go in the short term. I think that some urgent digestion is needed, and perhaps this data that's set to come out later on this week is going to be a catalyst for that digestion before a stronger move into year end. But the Dow Jones 30 is definitely on track to go and target its previous all-time high, which sits just shy of 37,000. So this is very, very strong. We're seeing a very strong move in the broad markets, and I would argue that we are seeing it broaden out as well. In terms of breadth, we're seeing money get pulled out of stocks like Nvidia, for example, which is down 2%. We have Microsoft, which is also down today, down 1.3%. We've got stocks like Apple, for example, that's down 1.6%. So the Magnificent Seven is seeing money pull out of that and going into other names. The second derivatives to AI, for example, such as MongoDB, that's up 4.4% today. Stocks like AMD, look at this, up 4%, breaking out here. So some really positive moves in the overall market, and I do believe that this can continue. But of course, we do need to get through a series of data this week without causing any hiccups along the way. But I really like the markets here. I think that we have further upside. Don't forget, guys, if you'd like to join my Signal team and copy my trades into year end, and make sure you scan this QR code on your screen. It will take you to my website where you can sign up to my Signal service, and you can copy every single move that I make in the markets. It's a very small price for a 12-month subscription, so go ahead, scan that QR code, and I look forward to welcoming you all on my Telegram group chat.